much for joining in and discussing a whole host of stocks. But time to get in to our special guest. We have Rajesh Kothari, Managing Director of AlfAccurate Advisors, who joins in. Hi, Rajesh. First of all, congratulations. I believe that y'all, the PMS that y'all run, y'all won a couple of awards, and y'all have relatively outperformed the market returns. So good on y'all in the last 1 year or so as well. I believe that though the markets are flattish or with a bit of negative bias, you'll have still given mid-single digit returns. But Rajesh, what do you do from here? The markets are looking a little bit brittle. Some concerns have come back on the table. How would you approach the markets? And the other big talking factor is earnings are dwindling down now. We're not getting that kind of growth that we anticipated. Your comment on that?
So first of all, thank you, Nigel, for your wishes. And from market perspective, I think that's what the common feeling I get when I interact with, partners, distributors, and common men on the street. But let me put a different perspective to it. If I have told you in month of January 2020, pre-COVID, that how much you think market will deliver in 3 years, subject to one, there'll be pandemic crisis, and second, there'll be Russia-Ukraine war. You would have said, forget equity, let me put into a fixed deposit. But today, when you look back, from Jan 19, pre-COVID I'm talking about, to Jan 2022, 3 years, Nifty has delivered decent 12% compounded returns, despite taking these two big hits. Now, do you think the next 3 years will be equally painful like last 3 years? I don't think so. And therefore, I won't be surprised if market continues to deliver good double-digit returns over next 3 years. Please remember that uncertainties creates opportunities. It is only those who invested during those crises, they not only made probably 12%, they actually made even more, maybe 18%, maybe 20%. So I think it is a good time. There is a decent time correction. There is a decent price correction, and earnings have done reasonably well. So I'm reasonably positive on market. In fact, I would say take any opportunity of take correction as an opportunity to further add to equity class. I think from here on, we are going to see probably another 2-3 months of this, a little bit of noise from the global market. But after that, probably most of the things are going to favor you.
Rajesh, hi, good afternoon. I get that. Good to hear your sense of optimism. I guess just for investors, it gets, it's really tests your patience, because the last 12 months, 2022 was pretty much spent in a wait and watch mode and dealing with a lot of headwinds. And 23 hasn't turned out to be any different, at least till now. Okay, so let's talk about what you would be buying. If you look at some of the portfolio sort of composition here, you've got banks, financials, you've got some software, over there. But tell us, let's say for every incremental 100 rupees that someone has to invest, looking at the environment around and taking at least a medium-term view, if not long-term, where would that money go? Or where should that money go, rather?
Well, I think from last, almost 18 months, we have been very bullish on capital goods as a theme. And if you look at our portfolio composition, sectoral allocation, it remains one of the top allocator is, CapEx play. So clearly, we are bullish on overall CapEx as a theme. So that's the first thing. Of course, I also believe that unlike last 2-3 years, where the poor quality stocks have done extremely well, this year we are going to see reversal of it. Now from here on, there will be difference between good and bad. So it is going to be more bottom-up approach rather than top-down approach. On top-down basis, capital goods, banking, and consumer, these are the 3 sectors which we continue to like. But then, of course, you need to go, really fine-tuning the companies and identifying the businesses which you think will not only grow, but has a less of balance sheet issues, very strong governance, and of course, ability to reinvest for the growth, and therefore strong cash flows. I think that will decide probably 2023. You will see a lot of alpha generation opportunities compared to last 2 years where, throw the dart, make the money, that 2021 period. Luckily, fortunately, that period is gone, which is the good news. And I think the sanity will now prevail.
Muthoot Finance is a stock that you've bet on. It's a part of your core portfolio. It makes it to the top 10 list of stocks. Generally, for gold, gold loan companies, the AUM growth has been fairly muted and it's been moderating in this quarter. And not just for companies like Manappuram or Muthoot, but even for banks, the gold loan growth has been moderate. Your thoughts on the space in particular, and from here on, what are the big triggers for a company like Muthoot Finance?
Well, this is a company. This is the name what we own in our AAA Budding Beast, which is a mid and small cap, PMS, on the table. And Muthoot Finance, if you look at the entire gold finance, as you rightly mentioned, not only last quarter, I would say last 4 to 6 quarters were painful quarters. And therefore, from now on, we are getting incrementally positive. It is a name which we added in recent times. And I think from here, as the company got more licenses to open the branch, if you look at the NIM pressure, probably the last of the quarter of that pain. If you look at the slowdown in growth, that is also probably last of the quarters. So I think if you again have from here, if you look at next 6 quarters, valuations are quite reasonable. It is one of the best play in gold finance. It's a top company within gold finance as a space. Best of the management, pristine asset quality, great business practices. And remember, this sector has always seen intense competition. Wherever the sector does well, everybody wants to do this business. And then everybody make losses and they go out from the business. Whereas Muthoot, and that's a moat of Muthoot, they know what are the right borrower profile, the risk profile, and the lending practice as per the requirement to make that continuous ROE and ROC. That's what makes Muthoot compared to significantly different compared to many other players. And the valuations are now at a very, very attractive levels, and the margin of safety right now is in your favor.
Okay, all right, Rajesh, we will discuss real estate in just a bit, but I'm observing you have a couple of cables and wire players. You have Polycab as well as Finolex Cables. Is that the indirect way you're playing the theme?
Yeah, I think building material is one space which we have been bullish on, and there are many companies within building material. All are debt-free balance sheet, all are cash rich, all are large players. They are all our top 3 players in the industry, and they of course they are great of the ROEs. Now, what is happening in this space is the demand growth because of the both government side capex, the private sector side capex, and also the residential real estate boom. All these 3 things will add to the demand growth for the sector. The sector has seen the headwinds in terms of the high raw material cost, particularly during 2022, the first 3 quarters. From now on, that is not going to happen. So that headwind is now gone. So I think you are going to see a very strong, I would say, EBITDA growth. And many of these companies, the 2 companies which you have talked about, particularly, say, for example, Polycab, they are also entering aggressively into FMEG segment. So it is what Havells did in 5 years, Polycab did in 3 years. And that's where makes a difference. Leveraging your existing distribution network, leveraging your brand, and these 2 things combined and enter into that consumer FMEG space, and that will also grow over a period of time. So I think we are reasonably bullish on both these companies, and Polycab has been our holding since last almost 3.5, 4 years. It has been good performance for us, and we continue to like this name.
Got that, Rajesh. Good chatting with you as always. Thank you very much for making time and stopping by today. You have a great